Good afternoon and good morning, everyone. Welcome to Morgan Stanley 20th Annual Asia Pacific Summit. My name is Ming Han. I'm from Hong Kong Equity Sales Team. Today, we are very delighted to have Benson Tam, our old friend, to join us again, who will give us an update on the China technology development, as well as, most importantly, the Smart City projects. And as Venturous Group is China's first Citytech Group. Before we start, I just want to remind everyone that today's session will be 50 minutes long. We will have a Q&A session at the end of the presentation. But if you have any questions, just feel free to send us through your browser, and I will ask on behalf of you to Benson after the presentation. So now, without ado, we start the session now. Let me hand over to Benson to kick off by give a brief introduction about himself and also the companies, the business, and his personal view about the China technology development this year. There's a lot of up and downs in the market, but we wish to hear more from his view. And I'll hand over just to Benson. Benson, thank you.
Well, thank you, Minhan. And hello, everyone, wherever you are in the world. I'm Benson Tam. Short introduction about myself is that for the last 30 years, I've been doing private equity. For the last 20 years, I've been living in China, inside China, doing technology. And I would say almost 10 years now, I've been searching for the next trillion-dollar opportunity, which is why I founded Venturous Group, and we do smart cities. So without ado, let's go on. Okay. So today I'm going to say about smart cities, and basically I have two conclusions only. Number one is that this is a 4 trillion market that we are seeing. That's number one. Number two is that smart cities will become the centers of the digital economy. That's why we need to look at smart cities. In order to demonstrate the two conclusions, I will give you basically only 3 messages in 3 sections. Number one, smart city is already happening now. This is the time to be starting to invest in it. Secondly, that this is a 4 trillion market by next year in China alone. And thirdly, Venturous Group, we want to introduce to you. We made a record-breaking 131 million fundraise Series A a year ago. So why now? Everybody's panicking. Everybody thinks it's chaotic. You look at the charts, it's off the charts, downwards. Meanwhile, every day you see press articles that are so negative and so scary. In my days, this is what I call the point of maximum panic and chaos. And to me, this is really the buying opportunity, because this is where sentiment has completely, in a sense, overdone what is really happening inside of China, and specifically the technology. I think the other thing I want to say why this is interesting is that I think it's so easy to misunderstand China. Everybody looks at the regulation and they say, you know, this seems to be a complete reversal to what has been happening in the last, say, 40 years of opening up. Well, it is more, to me, a swinging back on the pendulum. For 40 years, it's been very much sort of free-for-all, get rich as glorious, go and do your internet. And now they're, in a sense, starting to regulate. And perhaps I'll leave you with 3 messages here. Number one is that this is not a surprise. If you go and look at the 14-5-year plan, it's all there. It's been there all the time. Most people don't realize it, but that's the business plan for China. And it is the mission that China is doing it. And they fully expect to execute it. So go back and have a look at the 5-year plan. Secondly, it is about cleaning house. Like I said, there's been 40 years of get rich as glorious. There are a lot of people who got very, very well. Some of the industries go very, very quickly forward because, in a sense, regulation has been minimal. And in a sense, we need to do something because if you look at what is happening inside China, the middle class is very stressed, property prices, and so on, and other things. So that's why it's really just a house cleaning. I would also say a third message, which is that this is about mass migrating to an all-new digital economy. And so if you look at it from that perspective, this is more a pullback rather than a complete reversal. And that's why I say that this is actually a very interesting moment where lots of people are misreading China. Why are they doing it now? Because the biggest fear for China is that they get stuck, just like Japan, to be stalled in the middle income trap for decades to come. And so this is really a set of regulation to push through the glass ceiling and from an emerging market into shall we say, a more advanced economy. And with that setup, I will show you why Smart City is the epicenter of that opportunity. It is a 4 trillion emerging market, and it is getting a lot of government backing. First of all, why is it so big? Because if you look at it, if you really think about what the biggest problems for humanity right now is, it's almost everything to do with cities. Why? Because everybody is now swarming into cities. By 2050, 7 billion people were living in cities. It's polluted, it's congested, it's overpriced, okay? A lot of carbon dioxide emissions are coming from cities, 70% of them. You look at the waste, likewise, 50% of the waste. So that's why this is the biggest pain point for humanity right now. What you may not be aware so much is that it is not 10 years later that we'll have smart cities. In China, something like 800 smart city districts have quietly been upgrading to smart in the last 10 years. Yes, 10 years ago, they started doing networking hospitals to form networked hospitals so that whichever emergency room you end up with, you still will have your full medical records. And this has been happening, 800 of them. And the smart cities that we're talking about really is about all the various technology that you hear about. 5G, AI, IoT is what everybody hear about. What about augmented reality, digital twin, advanced manufacturing, and supply chain automation? All of this are now collectively creating a complex system integration, which will one day, I would say in the next few years, create programmable cities. What I mean by that is that you think you use a phone. The phone is now connected to the city. And in the future, your whole city will be in the phone for you to be in control of. And this is not easy because you can imagine you need the consensus of everybody inside this city, whether it's the government, it's the business, or the consumer. So that's why I give you another picture, which is that this is almost like an orchestra, and you need a conductor. Otherwise, you ain't going to get all these complex technology to talk to each other. And certainly, you can't make it all work within the next 5 to 8 years, which is, surprise, surprise, the time scale that China is working to. Now, in terms of scale, as I said, the latest research says that by 2022, next year, it's about a 4 trillion emerging market. The rough math works like this. It takes about $5 billion to build a small, I would say, city district, let's say 2 square kilometers. And there are 800 of them. That's why it is about 4 trillion. Within it, you're going to improve livability, sustainability, and productivity. You're going to make it more environmentally much better in quality. It will create better quality of life in terms of health and others. These are all very relevant and very important issues to be addressed by smart cities right now. What about what do we really mean by smart cities? Well, smart city is really having, as I said, the 10 or so different verticals of specialist technology that together form Citytech. Okay, Now, this umbrella of Citytech has three main areas. The first is smart energy. That's why you see that there is the carbon neutral policies that is being enacted in China and the world. The other one is smart buildings. Again, we have a company inside Venturous Group that addresses making buildings smart. And the third is, of course, smart city management. The reason why we picked these three is because is that in order for the Citytech to work and in order for this to be something that we want to invest in, it is a balance of making sure that we have other leverages and I would say support, whether it's government support, whether it's in a sense consumer good support because it is carbon neutral. And also this is also about digital infrastructure where you are building an infrastructure that is much lesser risk than some of the, shall we say, high-tech things that we're trying to do. So you can imagine these are the things that we believe are the pockets of value within this smart city transformation that is happening as we all migrate into the digital economy. So the third message I want to say is that in order to do and participate in this $4 trillion market, I think we need to look back into history in the first generation internet, which is PC internet, and the second generation internet, which is the mobile internet. And from history, learn about what is the way that we can, in a sense, best optimize and maximize our own gains into this new third generation internet. So that's why I will explain how we've done it. So first of all, Venturous is a group. We are China's first Citytech group. Our mission is very simple. We are here to make cities smarter. And the way that we're going to do it is a three-stage rocket on the right-hand side. It is about investing. It's first of all, this is the first phase. We invest into some of the biggest at-scale companies with a big market presence so that we now, for example, are in 170 of the smart city districts out of the 800. So we have a 20% market presence already after a short 2.5 years. But the next stage of the three-stage rocket, so to speak, is that after we have invested to be, in a sense, covering the market, we will start to build joint ventures with our leading technology companies. So we are building the first one called Neuron. And after that, we will be operating our own wholly owned subsidiaries. And that's how we're going to form a group. And that's how we expect ourselves to be listed within the next 5 to 8 years in Hong Kong. Well, if I delve a little bit deeper, what we're doing there when we say that we want to make cities smarter is that we are transforming cities by using technology to create the future of city living. And this is including work, live, and play. And like I said, the way that we're doing it is that we first of all use investing to become rapidly sort of covering the market. And then we go off and operate our own technology, our own proprietary technology. And the type of technology we're looking at really is to start off with is, I would say, infrastructure. It is almost like the utilities of the smart city. Like I said, some of the computing, the energy, the smart buildings, the smart city management, these are the very important deep technologies of which the whole city are built. Another way to think of Venturous Group is that we now have done our core, the 4 must-have technology within Citytech, which is smart energy, smart buildings, smart computing, and smart city management. Those are what I call the data magnets, and they will allow basically almost all the data within the city to be going through these platforms, which then I can build extension platforms that are applying those basic data sets into, for example, health tech, fintech, smart mobility, supply chain, and so on. We also believe that smart city is probably the most ESG of all themes, because if you are serving a city of all their citizens, create a better living, you basically are impacting all of E, S, and G. And that's why, and we have very, very tangible key results. Specifically, for example, the companies that we have invested in has already saved 2.1 million tons of carbon dioxide emissions. So I will very quickly go through some of our companies just so that people get a little bit granular about it. Again, sort of Anjie, energy networking company. And it's actually the networking technology that makes the energy saving so big. That's why 15 to 30% of every building that they go into. And this is not a startup. This is not just a theme. This is a company with real revenue, real profits, dominant in Tianjin and now going nationwide. Smart computing, iSoftstone. This is a 85,000 employee company, as I say, covering 170 cities, districts within China. All of Huawei, Alibaba, Tencent, Baidu are their customers. And so is almost all the top players in each of the industry sectors. This is a company with about 2 billion in revenue last year. And like I said, smart computing is not simple, not trivial. Not only is this data center, data processing, but this is AI, this is facial recognition, and this is real time as well. And so this is at scale. The difficulty is not a technology breakthrough, but at scale, real time. We also have another company which is called ISS Tech. This is a smart city management company. And what they do is that they run entire city districts, communities for the local government. Imagine basically almost a control center in one of the communities that we have run in the last few years. It covers about 1 million population. And within that particular community, within about a short 2-3 years, energy consumption is down 20% per capita. Crime rate is down 80%. And the satisfaction ratio of the population there is actually up 50%. So this is another very interesting emerging market that we are seeing. And then lastly, other than the 3 pre-IPO companies we have, we also have this, which is a partnership with Arup, where we are building effectively a brain into every building in the world. Arup, I call them the Google of construction. All the tallest buildings and longest bridges in the world. If you look behind the architect, the structural engineer, most of them are Arup. And they have the expertise, domain expertise within the buildings. And we are partnering them to turn this into a global cloud-based software as a service, AI-driven, IoT-enabled platform. So what's the difference of our group structure? The biggest difference is that we'll be IPO'd in Hong Kong in 5 to 8 years. This basically squared the circle for a lot of our investors because on the one hand, smart city is really inconvenient to you to build for the next 1, 2, 3 decades. This is what I call, a very long-term enduring compound return opportunity. But nobody is going to come with me and say, back me for 20 years. So instead, what we've done is to create a group structure so that our Series A, Series B, and other investors can have the opportunity, if they so wish, after we get listed in Hong Kong, to either trim their holdings or perhaps even completely sell down or perhaps even double down. It makes it a lot more flexible and it makes it a lot more optionality for our investors. And the way that we look at it, the way that I look at investing, building, and operating is basically taking what I call a barbell approach. The barbell approach is something that we have done very well in the past. This is taking a page out of Peter Lynch's approach to investing, which is, he said, 80 to 90% in blue chips and 10 to 20% in emerging opportunities. They can make the whole portfolio. We also take a very long-term approach, not just looking deep into the future in terms of how smart city is going to be built, but also having taken the time for 20 years to build up a proprietary, in the science, deep inside of China, a network and ecosystem. I call it the band of brothers, that basically goes back to the birth of the internet. So this 20-year perspective really give us a lot of difference to everybody else. I think the third part that we're very different is that we are truly CEO-centric. Venturous is all about winning wars alongside the CEO. We take a partnership approach. We take 15, 20 years. In the past, we've been in Tech, Alibaba, Asia Info, 15, 20 years, where we are alongside the CEO every step of the way. And that's why we're so different, and that's why we are considered strategic partners to the CEO. Well, the last thing I want to say is that, well, as they say, show me the money, and I am. And I am, for one, stepping up to the plate, and I'm the biggest shareholder of Venturous Group. The second one is UK's largest China investment trust. They likewise believe in what they have seen, and they have put in 35 million into Series A. And of course, Xavier Kwan, who was the ex-COO of Alibaba, and he put in another 10, and there's another CEO of another tech company put in another 10. So I guess what I'm saying is that there are people who truly believe that we are on the cusp of this 4 trillion opportunity. And I, for one, is putting all into this. And this is the roadmap of how we're going to get to the IPO. I'm not going to talk about it. You can certainly ask us about it. But the idea is that we will be a group of companies, 2 or 3 of our own subsidiaries with our own proprietary technology and businesses, surrounded by 6 to 7 core companies where we have strategic stakes, hopefully between 10 to 20%, and then surrounded even more by an ecosystem of companies, and together forming an entire ecosystem and platform that can integrate almost all of the technology that is needed in this very complex, programmable city tech of a smart city. So with that, I finish. If you want to join us, you can online. We are on LinkedIn and others. In about 2 weeks, we have our annual Smart Citytech Week. Feel free to join us online. And with that, thank you. Minhan, I pass it back to you.
Thank you. Thank you, Benson, for your excellent presentations. So we now open the floor to questions, to Q&A. So audience, do feel free to send us your questions through your browser, and I will read it out for you. I think while we are still waiting for our audience to send the questions, maybe I kick off with my questions for Benson yourself. In your presentation, you already give very clear pictures about this year's all the regulatory environment changes, all these up and downs in the stock market. You already you have 30 years of experience in this investment industry. You obviously see a lot of that. But this year's particularly a lot of investors, especially foreign investors, expressed the concerns on China, the policy consistency, transparency. So I just wondering, you also asked talking about your company's IPO plan in the future. But given the market now, all these kind of the data rich companies, the government the regulations are now getting tighter. So how's your feedback from your investor or your partner, especially from overseas, to look at the China, the environment right now? And are they also having concerns on getting out of the capital through the IPO? So anything you can share with us will be
great. Well, first of all, I mean, I'll answer the last one first, which is how are people thinking about it? Of course, people are nervous. If you sit thousands of kilometers away, you look at what is happening, you only see the service. It's very, very unsettling. So I do get asked about this a lot. On the other hand, I'm also seeing the true China hands, some of the biggest names, I think they've already made the case very clear. Bridgewater, BlackRock, even some of the other investment banks as well. They've been quietly building up their positions inside of China, specifically in technology. And so I would say that on the one hand, there's a lot of nervousness and a lot of people are pausing for thought. I would say that some are already starting to take advantage of the almost like, Double 11 grand sale prices. So that's number one. Number two is that I have not seen such a high conviction moment in my investing life since 91. 91 was when I saw China that is just waiting to explode into the world. And the sort of consensus in the population is all very singularly minded that they are going to build the new China. And I truly feel it this time around. This is the first time in 30 years I felt it so strongly in a particular sector, in a particular country, and in a particular theme. And that's why, for me, that's why I'm going all in at this point. I would say that thirdly, in terms of regulation, like I said, if I only leave you with one word, it is that China is starting a mass migration from traditional economy to all digital economy. And for you to move into this all new economy, imagine you're going to a brand new continent and you're just settling down there. And guess what? You move into town and you found that the town is already, in a sense, owned by some monopolists, and that you have no protection in terms of your privacy and everything else. So that's why they must clean house if they truly believe that the whole world is moving to a digital economy. Anti-monopoly, data privacy. That's exactly what needs to be done, okay? During the moment of, I would say, transformation, it's always uncomfortable. You're changing the rules of the game in the sense that you had certain rules in the past, you're adding an additional one, and therefore changing it. And this is the moment. It's in a microscopic way, it is very unsettling. But if you look at the macro way, as I say, de-stressing the middle class, breaking through the middle income trap, and then mass migrating into the digital economy. If you look at it from that perspective, I would say that I'm very, very excited. In fact, I would say this is the start of a whole new economic structure, and therefore supported by a new sort of way to get things done within China. It really reminds me so much of 1991 when Shenzhen is just coming up and the whole new China is just exploding into the scene. So sometimes I call this the second 改革开放, opening up and transformation of China all over again in terms of the economy. Yeah.
You do sound very, very bullish about the future of the smart city and China, obviously. I agree with you. And in your presentation, you're also interested in mentioning the ESG, which this year, since the last few years, I think globally, a lot of investor awareness on the ESG and looking to ideas and also opportunities, especially in China or in the whole Asia. So just wondering, in your interaction with your portfolio companies, how you help them to incorporate ESG into their company strategy? Do you have any detailed example to share with us?
Yeah, absolutely. Well, Minhan, I mean, that's a very good question. I've been thinking about impact investing and ESG for a very long time. But in the past, the consensus has always been to whatever is the market return, you have to take a discount in order to do impact. And therefore, you always end up with sub-market returns. And that's the challenge of impact investing and ESG. And yet, sometimes, having been involved with Alibaba for 21 years for quite a long time, and so as others, the most green of all technology is actually IT. look at e-commerce. It saves you having to drive down there. It saves you having to pick it up from the shop, and so on and so forth. And so I always say that IT to me is the most green. Then you move it to the current sort of form of IT, which is smart cities. What is smart city really for? Smart city is to make it for the people so that it's more livable, sustainable, and productive. E is about environmental. So clearly it's about energy. Social is about, can you manage the city much better so that it is much more harmonious and there are less crime and so on and so forth. And governance is about, making it a fair, open society so that everybody can win, that there is not this huge, rich, poor gap. So that's the governance. And that's why I come back to say, I think smart city just happened to be the most ESG of all things. And just being technology itself can leverage you to get to that. And the good thing about technology is that because it's so asset-light, you can actually get premium to market returns. And that's why we're very, very excited about it. As to how we help them, I guess by nature, these companies are working on things that are good to the city, either in the sustainability, deliverability, and the productivity. So that's why they're already helping. How we are helping is, of course, we are, for example, in the energy company says, I think we need a national standard for how much we have reduced in carbon. What do we mean by carbon peak? What do we mean by carbon neutrality? And how do we measure it on a day-to-day basis? Because if you can't measure it, you can't manage it. So that's why the first thing is measuring. And on that, for example, ourselves, Venturous Group, together with Untitled, our energy company, together with certain state institutions, we are promoting and, in a sense, researching these standards. Yeah.
Thank you. Thank you for your detailed answers. We now have our first questions. So the question is about the property market. Obviously, this year, that's been recently being brought a lot of investors' attention and concerns as local government now are facing huge pressure for the property market deleveraging, also some of the developers' default risk. So obviously, smart city project is something that in the long run they are focusing on, but just in short term, in this cycle, are you seeing working with local government? Are they like it's too risky to dealing with both the short term issue and the long term issue from them?
Right. Good question. Now, first of all, can I make this very clear? Smart city is nothing to do with property development. It's nothing to do with land. It is about turning existing concrete property developments and adding technology. You can do that. That's one way of doing it. So that's why there are so many districts. Our districts that embrace smart city technology tend to be either very old or very new. For the very old, they need to re-attract the young population. Therefore, they make it sort of more technology savvy and make it much more attractive. This is not about property development. In the new cities, likewise, again, we are not creating more new towns. Instead, what we're doing is that, for example, typically is that next to a cluster of high-tech park where there are a lot of workers, where there is a shortage of housing, we can actually create a smart town right next to it. A classic example of this is actually Cloud Town, just outside of Hangzhou. And it was created because they need to house all the staff of Ali Cloud. And Cloud Town is a partnership between Hangzhou city government and Ali Cloud. So that's demand-driven. So it's about technology. It's not about the property. Yeah.
Okay, thank you. The next question is about So can you tell, the investors asking, can you give a little bit detailed example of your 9 core holding areas? Some of the areas that you mentioned that definitely show attractive the momentum, but any areas that you're seeing that not as performing as you previously expected due to maybe regulation or maybe competition or whatever. So any areas that you are seeing particularly not that as attractive?
Well, interesting. Now, remember, the regulation is not pulling everything down. What I'm seeing is that the regulation is a David and Goliath. It is always in the newspaper because it's hitting all the biggest companies and they tend to be listed. So that's why you are seeing a lot of negative press about, whether it's Alibaba or Tencent or everybody else, that all the regulation is hitting the Goliaths in the technology space. These are, shall we say, they're so big that they are very fast becoming almost like monopolies. That's why they're being hit. On the other hand, the regulation is helping everybody else, the Davids, the smaller companies, including all the companies that are emerging like ours, who are not the Ali and Tencent of this world. And the Davids are now actually having it even better. Because in the past, in Chinese, we call it Sanzhou Da San. So the 3 big mountains you can't overcome, Baidu, Ali, Tencent. Now suddenly, in a sense, the government is saying, wait a minute, that's the 3 mountains. Please sit down, have a rest, slow down while everybody else catch up. So to us, actually, the 9 companies that we have actually have all benefited from the regulations. And for example, in the energy space, clearly the decarbonization has turbocharged our energy networking company. Smart computing company, whereas in the past, it's very difficult for them to compete against the Ali and Tencent of this world. Now, because they are fully compliant, they process data for the 170 cities. They don't own the data. They process on behalf of the city. Now, that is actually much more compliant than some of the bigger ones. So that's why, again, we are benefiting from the regulation. The other thing I would also say is that on top of that, don't forget what you have seen in before COVID and after COVID is that there is this massive acceleration going into the digital space. So that's why all of our company, every single one, is in the digital side. And that's why they are all benefiting from this shift towards digital. So net, what I'm saying is that because the positioning for Smart City is right, this is what the government wants, and we are the Davids, not the Goliaths. And meanwhile, we are benefiting from the acceleration in digital is actually faster, not slower. On top, of course, what I'm saying is not that the new regulation has no impact. It has impact. What it does mean is that even though we are faster ahead, we have to, in a sense, shift our game so that we put more prominence on working in sync with the government, meaning that and following the new regulations and following the 14th 5-year plans. So we are cognizant of that. We are shifting our game, but we're shifting gears. We're not slowing down.
Thank you, Benson. Next question is about the Venturous Group itself. You talk about your IPO plans and also the unique structure why it is not a PE firm. So the investors is asking your view about the SPAC, given the Hong Kong Exchange is now having some new initiatives to encourage in the future the SPAC companies to get listed. Will that something that you will think of?
Possible. To me, the listing is a means to an end. It is to give our stakeholders and shareholders a means to get liquidity in the medium term. So SPAC is possible, just like in the old days, the reverse takeover is possible. IPO is just another tool. There are many things that we can do. And that's why we want to use a group structure. If you really think about it, group structure seems innovative. And it is definitely in line with what Sequoia is doing with their new sort of evergreen fund. We are likewise having a group structure on top and then sort of companies on the bottom. So it's almost like very similar to that. So we are on the right direction of history. On the other hand, group structure is also the oldest structure in the book. You look at every single billionaire business empire in Asia and China, and every single one of them has a group structure. None of them has a fund structure underneath it. There must be a reason. The smartest people, the smartest billionaires are all using that, and that's why we're using that structure. And the third reason why we're using the structure is that our 4 core companies are in sales forming joint ventures. They are forming co-marketing. They are forming sort of joint research programs. And so they are all interconnected. And a group structure just makes it a lot easier for us to do that, because the interest is all aligned, because everybody's at the top. And so we minimize the conflict of interest. So for all these reasons, we use the group structure. But short answer to the audience question, SPAC is not out of the question. It's possible.
Okay, thank you. Given the interest of time, maybe I take one more last question. So the question is about the risks and the challenges. If you're looking forward for the next 5-10 years, obviously you are bullish and you think the regulations will not hold back the development pace. But if anything can go wrong, that what will be your largest concern at the moment?
Well, I think my biggest challenge is not the challenge that you may think. My biggest challenge is Smart City is about the city internet. City internet is what I call the 3rd generation internet. The 1st generation internet happened 20 years ago. By 2000, the PC internet came exploding. That's typically right. Within 5 years, just 5 years, the BAT of the world, the dominant ones in the 1st generation internet, appeared. 10 years later, the 2nd generation internet, the mobile internet, again, 5 years later, the dominant ones are dominating. The Pinduoduo, the Xiaomi, the Didi, right, and the ByteDance. Okay, so my biggest challenge is that I may be ahead of the curve here, but I only have 5 years to make sure I catch that big whale. And so that's the challenge, and that's why we are using this approach. Investing in a startup doing a super duper, amazing technology just will not cut it, because I'm not covering the market fast enough. 5 years is a very short period. And so that's the biggest challenge. That's why I cover the market, start to get inside the technology, and create our own subsidiaries. So this is a very fast-paced, I would say, capturing, or shall we say, a battle to win within 5 years, a dominance within the 3rd generation internet. That's my biggest challenge. I think the rest is that we are fully cognizant this is a point of transformation in China. And yes, I'm bullish, but no, the world never developed in a straight line. It's always like that. The easiest way to think about it is go back, like I said, to 1991. Imagine you have a time machine. You now have a chance to go back to 1991, and you now realize that Shenzhen is the way to go, within China. Now, what are you going to do? Okay. And also, the most important thing is, are you going to be scared so that you just hand in the chips in the middle? Because that's also the biggest challenge I see all the time. When you have a enduring compound return for 20 years, well, look at Alibaba. Okay, it went down 50% in the last year or so. But nevertheless, there are fluctuations like that throughout the history, the 20-year history of it. And who wins? It's the people who hangs on in there, because this macro opportunity is just big enough. and you need to be able to stomach the volatility. And I guess the challenge is building a structure that can still survive that. And in our case, that's why on the one hand, we are very bullish about it. On the other hand, we stay very safe. We have out of the 9 companies, 80 to 90% of our balance sheet is in 4 of which 3 are pre-IPO. The last one is with the biggest engineering firm in the world. So we are very cognizant of the risk. And what I say is when I talk about barbell is if you want to take a long-term risk, you need to have quick win. And the asset quality in the beginning balances out the opportunity risk. And this is the dynamic, I call it in engineering speak, dynamic load balancing. And that's what we do.
Good.
Again, I can talk forever about it, but it's fascinating. And don't forget, it's when everybody misread the market, that's when you will make money.
Good. Thank you, Benson. Thank you for spending time with us. For the interest of time, we may conclude this session. Audience, if you have more questions, just feel free to send to your Morgan Stanley representative. We will pass in those questions to Benson and Venturous Group. Again, thank you very much for joining us, and we are looking forward to seeing you again to future conference. Thank you.
Thank you, Minhan. Thank you, everybody. Have a good weekend. Take care. Bye.